and gentlemen, welcome back to the channel. In this video, we're talking Rezolve. This one's gonna be kind of funny. Jim Cramer, the Cramer guy. We all know who Jim Cramer is. Inverse Cramer grew to be pretty popular in the last couple of years. Well, he talked about Rezolve on CNBC for about 2 or 3 minutes. He did a report on the stock. Didn't do a very good job. He had some negative things to say. It is my job on this channel to give you the good and the bad. Okay? So this was definitely not a good report by Cramer. And it was definitely not a good commentary. Some aspects were good, some were not. So what we're going to do in this video is we're going to start off this video with sharing what Cramer said about Rezolve live on TV. And then for the members in the trading community, I gave my thoughts on this. It's a long post because Cramer didn't do a good job, as I said. And I want to clear the air for all of you as well. So let's start this off by saying, hit the like button, subscribe to the channel. You gotta stay notified here if you follow the stocks that I follow, because when you hear bullshit like Cramer said, you gotta know the truth, or you're gonna get scared, you're gonna sell out, you're gonna make a decision that you're gonna come to regret. You want to minimize regrets, okay? Secondly, if you guys have not joined the trading community already, come join it. What we're doing is going out, finding small cap AI stocks winners before Wall Street does. We are outperforming all hedge funds and institutions this year. I'll show you the portfolio in a minute. We're up like 180% year to date. I don't know of any firm that is up anything close to that. So check it out, link down below in the description of today's episode. But let's get into what Jim Cramer just said about Rezolve.
After I got stumped with a couple of names in the lightning round last Thursday, just before the break, I covered Credo Technology Group, which makes connectivity equipment for the data center. It's a red hot stock that's been pulling back, and I think it's a buy or weakness. Next up, Brian in Rhode Island asked about Rezolve AI, and that's with a Z. But this is a very different kind of artificial intelligence play. Brian told us that Rezolve had partnerships with Google, Microsoft, and the stablecoin issuer Tether. Sounded intriguing, but alas, I didn't know the company at all, and the stock has been straight up recently, so I told Brian that we get back to him. I didn't know Rezolve because the company essentially came out of nowhere over the past year or so. Rezolve actually announced a deal to become public via a SPAC merger way back in December of 2021. But that deal didn't close for over 2.5 years. Finally, in August of last year, it did. But after the stock spiked to $12 in the days after the deal closed, the thing then dropped like a rock, falling all the way down to $2 and change late last year before finally bottoming at $1.07 this April. At that point, Rezolve AI was too small for me to even mention on air. By late August, though, it had rebounded to around $3, and over the past month or so, the stock has more than doubled. It's now sitting at nearly $6, and that's after pulling back hard from its highs a little over a week ago. So what exactly does this company do, and is the stock worth buying now that it's cooled off, including a savage 10.8% decline today? Okay, Rezolve makes AI software for e-commerce, including chatbots, that act as personalized shopping assistants, listening to what the customer is looking for and steering them in the direction of what they like, as well as a one-click checkout solution that makes people more likely to complete their transactions. I could go into more detail, but I'm going to stop right there because, well, I don't like Rezolve, not one bit. Why? For starters, this is one of the most promotional companies I've ever seen. As promotional as I think you can get without, let's say, getting too close to the wall. Those so-called partnerships with Microsoft and Google, they seem flimsy. I went back and looked at the announcements, both of which came in the fourth quarter of last year, and basically Microsoft and Google are reselling Rezolve software tools through their cloud stores, while thousands of products are available there. If that's a partnership, then anyone who sells things via the App Store has a partnership with Apple. Rezolve also puts out tons and tons of press releases, often for trivial reasons. A few weeks ago, they published a press release just to point out that a couple other AI stocks are valued much more richly than theirs. Who the heck puts out a press release to announce that their stock is too cheap? That's a red flag to me, as is the fact that Rezolve is pursuing a Bitcoin treasury strategy where they buy Bitcoin or some other cryptocurrency as an investment, although the details on that effort are very vague. It's not even clear if they've started. If you've got a business that's worth investing in, why divert your money to crypto speculation? Here's what makes this even worse. Not only is Rezolve hyper-promotional, the company's also a serial seller of its own shares. Just this week, in fact, the company announced that it had raised $200 million in a private placement involving a number of existing investors. For that private placement, by the way, management priced the offering at $5.40, which was well below the stock's spot price of $7 and change at that time. So they hyped their stock, they hyped their own stock to attract home gamers, maybe like you. Then they sell tons of shares on the cheap to big institutional investors. And this is just the latest example. For perspective, in an SEC filing from August of last year, Rezolve said it had 172 million shares outstanding. In that same filing from this August, it was 244 million shares. And at last count, in its filing early this month, the share count had grown to 284 million shares, which doesn't include the 37 million shares just sold in last week's private placement. This is a head scratcher. Then there's the financials, or should I say, the lack thereof. Rezolve essentially had no revenue last year. Specifically, they had roughly 188,000 in revenue. Not 188 million people, 188,000. As for earnings, they reported an operating loss of 138 million. And that's the last actual result we have from Rezolve, because this is a British company and he only needs to report earnings twice a year. Now, management says that they weren't trying to have revenue in 2024 and that this is the year where it should all come together for them. Rezolve has said repeatedly that they expect to reach $100 million in annual recurring revenue by the end of this year. They've been saying that since late last year, and to their credit, they haven't backed away from that target. Over the summer, the company disclosed that it had reached $70 million in annual recurring revenue, and they've repeated that a few times. We'll know more when, again, they report October 1. I'm assuming they'll have decent revenue results, but I suspect that those will be paired with rather large losses. Still, the company might say that the end of the year ARR target is now $125 million or something like that, and the stock could soar. Wouldn't shock me. Of course, given that the stock's more than doubled in a month, expectations should now also be pretty high. So if the results don't live up to management's recent bluster, then look out below. Honestly, I wouldn't try to game the quarter either way. But overall, when it comes to Rezolve AI, I just can't find much reason to chase the stock's recent rally. The Rezolve story has a lot of sizzle, with a yet-to-be-determined amount of stake. Given that the stock's up more than 450% from its April lows, I can't countenance recommending this one, especially with all the red flags we've seen from management. Look, I'd love to be proven wrong with this one. Maybe they'll report something incredible next week. But I got to go with my gut, and my gut says the risks outweigh the potential rewards. Here's the bottom line. If you want to play on artificial intelligence, I'm begging you to find one with actual earnings, like the Credo Technology Group that I just talked about, and not a money loser like Rezolve AI that seems best at promoting itself and then selling its own shares. Usually those aren't great qualities.
So yeah, that was a kind of a joke of a quote-unquote report. Here's what you really need to know, and what I posted for the trading community right after that. And shout out to Talon in the trading community, right-hand man, for pointing this out as soon as it came out. I wrote, "Thank you for pointing that out, Talon. Here are my thoughts for anyone curious. I think a lot of what he said was fair from an outside perspective, like for someone that hasn't been following the company, that stumbled across it, in a day. Like saying the company has a lot to prove after rallying so much. That's fair. It's also fair to say that the company could report a loss. The company said previously that they should be break even at 90 million in ARR. I expect that number has changed since they started the professional services division. Of course, Cramer didn't mention that. Cramer did not mention the professional services division. As the company has said recently, that is growing like wildfire. No mention of that at all. Okay, which you should probably mention that. Okay, that's a $500 billion industry. But fine. Cramer did not mention that the company said that they would be break even at 90 million in ARR. Okay, I've talked about this on the channel for a while now. I expect the number has changed. Maybe it's now 150 million to be break even. Okay, they're going to report a loss. They're not going to be profitable. We know this. We expect this. If they are, that's great. That's a surprise even to me. Awesome. I go on to say, what I really didn't like is the negative association between press releases and nefarious activity. He makes it sound like just because the company likes to keep investors informed, it's somehow shady behavior. Also, the pumping of the stock to sell shares at a discount to institutions is a bit misleading. Here's why. That's the whole point of being listed on public exchanges, is to grow the business and to raise capital. The CEO has said multiple times, even recently, as I've pointed out, that they will be strategically raising capital to do M&A activity to remain the number one leader in conversational e-commerce. Did Cramer mention that? No, not at all. The company, the CEO, as recently as a week ago, said that they will strategically raise capital. This is not like super secretive information. Now, I will also point out that Rezolve, the management, feels like the company is trading significantly lower than where it should be, which I agree with that. I've agreed with that from the start. The reason for this is it's not necessarily just a function of the numbers themselves. Like, sure, if Rezolve is probably trading around 10 times price to sales, if the company gives us guidance of 150 million in ARR, okay, that is a third of Anthropic. That is 1/10 of Sierra AI. That is less than BBAI, SoundHound, Nebius, like go down the list, okay? It's trading at a discount compared to those peers. But why is it really trading at a discount? Because the market Rezolve is targeting is not a market where you're going to grow 20% a year. Okay, it's a market where you could grow 200% a year. Typically, with companies that are in such a large market like Rezolve is in, the $30 trillion e-commerce industry, you're typically given even a higher multiple than, let's call it, similar AI companies, right? Because the market opportunity is so large. For an example, why do you think Tesla's a $1 trillion plus company? It's not their numbers. It's because the AI projects that they are targeting, Optimus and Robotaxi, are such large markets. Even if they're remotely successful, it's going to mean some big numbers down the line, right? Rezolve is in this same category, okay? Their market opportunity is so massive. Cramer mentioned that? Of course not. I say, and companies almost always sell shares to institutions at a slight discount. This is not a Rezolve anomaly. He, of course, failed to clarify that. This is what happens. You get shares at a slight discount. Rezolve also did not mention, again in context, that isn't it impressive institutions are willing to buy the stock 400% higher than its all-time low, which was a couple of months ago? Yes, at a private placement at a slight discount to where the stock was trading at. Fine. You want to pick bad apples out of that? Great. But didn't Cramer just say the stock was $1.07 at the low? But yet institutions are willing to take a private placement at $5.40. Isn't that valuation support justifying the valuation at $5.40? An institution did. Now, assuming these institutions had some kind of terms, like you got to hold the stock for 30 days, 60 days, 90 days, 3 months, whatever it is, right? Assuming there was some terms there, that means they did a private placement at $5.40 6 days before earnings. As I've said on this channel before, that is a very strong sign that we're going to have some good numbers October 1st. Now, October 1st is part one of 2 parts of the thesis around Rezolve and my expectations for the stock, right? Again, I think anywhere from 150 million in ARR guidance to as high as 300 million is in the cards for October 1st. The higher, the better, clearly. But the massive upside comes for Rezolve when we get 2026 guidance. It's possible the company throws out loose guidance. They could say something like, if this growth continues, we could be $1 billion in ARR next year. It's not official on paper guidance, but it's a projection that we might be at $1 billion in revenue in ARR by the end of 2026. You might get something like that on October 1st. That could be a huge catalyst as well. So hopefully that makes some sense. Cramer said that the company's partnerships are quote unquote flimsy, but failed to acknowledge the recent recruit from Microsoft and the one prior from Accenture. Guys don't leave semi-senior roles at major companies to join a flimsy partner or minor competitor in the case of Accenture. That just doesn't happen, right? These guys don't leave semi-senior executive roles at Microsoft and Accenture to join some Hail Mary company. Maybe that happened, but highly unlikely. He failed to mention the recent recruits from Microsoft and Accenture. This is very public information. Cramer should know they put out pressers about it, okay? He didn't miss this news. He just didn't want to share this news. Great. I said it's also a bit misleading because of last record, executives at the company owned 40% of the shares. Okay, so this kind of ties into the whole pumping of the stock to sell shares to institutions at a discount, suggesting that is somehow nefarious activity. Again, that's what companies do. Rezolve is a small company. Things that are not important to Microsoft, that Microsoft wouldn't put a presser out for, Rezolve should. I actually think it's a great thing the company tries to keep investors up to date, especially since they're last reported in early 2025. It's been a while since we've gotten a damn earnings report, which again, we get that on October 1st. But Cramer did not mention the ownership structure, which insiders owning about 40% of shares, 30, 40%, numbers are going to vary, means that if you buy the stock and you do well, institutions are all, or insiders are also aligned with you. Why was there no mention of this? That's not a small detail to miss. Great. Cramer also sounded misleading when he said the company just came out of nowhere with no revenue. Again, this is something where if you followed the company, you know this, but the merger process took a little bit longer with Rezolve because Rezolve did in fact have 100 million in ARR already. Okay? But they had to sell off that business in order to go public because the SEC did not like the fact that Rezolve had all of their revenue coming from China. So they had to delist or sell that side of the business and then get listed. So they started with essentially zero revenue. That $180,000 in revenue was from a trial run of a Phoenix Suns like basketball game or something like that. Just a trivial kind of run back in 2024 to make sure their product worked. Okay. So very misleading there. Obviously, he forgot to mention that. Again, I say here, the company had 100 million in ARR they had to sell off in order to become public because that revenue was with China. So again, very misleading what Cramer said. Something Jim Cramer should have known by doing a piece on the company on television. Also basically pointing out the SPAC length was a bit of a low blow considering that's pretty average for SPACs. It was a little bit longer, but it wasn't like unusual for a SPAC. And the comment about being a super promotional company, honestly, I have no idea where that came from. If any of you guys can clarify, they don't run ads that I've seen, so I don't know where that came from. I do, in fact, agree with the obvious. Jim Cramer said he thinks the company will do a guidance raise. 125 million is probably well priced in at this point and a semi-neutral point for the stock if that's what we get. For an example, what I mean by this, if we get 125 million in end of the year ARR guidance, with the stock at $6 per share, I don't think that's really a positive nor negative catalyst at this point. Yeah, that would be a guidance raise, but the stock is up. I think that's a pretty neutral point. If we get 150 million or higher, that is where the money is. Okay. Now, I say here, obviously he left out the ownership structure in the clip, but well worth mentioning. Again, things I did like. The fact that the company was talked about on TV, that means more people are going to be exposed to the company. The inverse Cramer effect, that one's obvious. If Cramer says he doesn't like a stock, historically, that stock tends to do pretty well. The fact that he says the company will raise guidance, ... The question is how much. I say overall seemed like a very half-assed report. Talked about the things he wanted to talk about, left out the things that I think are very important to talk about, right? But that's why we are here to clear the air. Not surprised though, Cramer has a bad track record of being early. He's never correct on early winners. I mean, he wasn't a fan of Palantir at the time. He wasn't a fan of Tesla at the time, right? Like there's so many examples of this where Cramer's just not good at being early. It just is what it is. And this was a very poor report to be aired on TV with a lot of critical details that we're missing. But good news is, if you're watching this video, you have the critical clarity that you need. Now, I've also heard some people with the drop on Friday get a little nervous, get a little scared, okay? You got to understand this. This was a low volume sell-off, okay? A low volume sell-off. Friday's sell-off, again, down 10.8%. Even Cramer mentioned it. You only had volume of 19.8 million. Most every other day is higher than that. The two prior days, September 25th and September 24th, the volume was lower. Here, 20.4 million, 22.5 million, 24.5 million, 21 million, 33.5 million, 34 million, 35 million, 32 million, 19 million, little under 20 million. It's a pretty low volume day. Okay, so what does that mean? The dollar amount, well, I'll just call it 20 million. Just round up a little bit, right? With, let's say, an average share price around $6.25. There was only $125 million worth of volume in Rezolve on Friday. That is nothing compared to, let's say, again, Tempest, well-known AI stock at this point. What was that? A Nancy Pelosi move. I think NVIDIA bought the company, blah, blah, blah. You had, what, 21 million? 21 million in volume this day. And let's say average share price around $93 a share. That's $1.95 billion worth of volume. Again, very low volume sell-off. Now, again, with the stock just being on TV in general could help bring more buyers in. But none of it really matters until we hear from the company on Wednesday in the morning, which we will be going over the numbers initially when they come out, talking about the stock and whatever reaction we see on Wednesday in the trading community in the morning. Then we will be live streaming the earnings and talking about the earnings call and all of that after the call is obviously over with on YouTube. So if you guys want to come join the trading community, check that out. Link down below in the description of today's episode. Again, if you want to come join the trading community, I was wrong. We are up 177% year to date. Again, you get the idea. We're doing very well and plan to continue to do well. But first, let's see how Rezolve does on Wednesday. As pretty typical, I did not sell any of my position at all in any portfolio. Current market value, $67,210. Unrealized return, $36,452. Average cost basis, $2.80. Invested for 99 days. 11,000 shares here. In this portfolio, market value, $79,400. Currently up 117%. Up about 43,000. Average cost, $2.82. 13,000 shares. Still own the Rezolve 250 calls for February 20th. 15 of them, market value $6,300, total return 300%, up $4,725. 15,000 plus 11,000 plus 1,500 plus 1,000 shares in Webull and 1,300 shares in Thinkorswim brings you to 27,800 shares in total exposure plus times $6.11. Currently have a little bit less than $170,000 invested in the stock. So again, I'm going to be right big or I'm going to be wrong big. So come to your own conclusions. Let me know your thoughts down below in the comment section. Have a great rest of your day and a great weekend. And I will see you in the next one.